Welcome to another episode of Truth in Trucking. We have Edward. We're not going to disclose his company name at the moment because he's going to share some things about how factoring companies work, the good and the bad. So my name is Harold. I'm with Untouchable Insurance, and we have my partner here, George.
With HCM Integrity Services. How's everybody doing? And welcome to another episode of Truth in Trucking. We got Edward here. He is with the factoring company, but we decided not to disclose that information. All right. Well, anyway, he's one of the good guys. I know that when it comes to factoring companies, everybody has a bad reputation, or they think they're like the mafia of the business. But just like everything else, there are some good guys out there. We think that Edward is one of those. And so he's going to kind of explain to you how his factoring works. And we'll probably ask some questions, me and Harold, to hopefully ask the questions that some of you viewers out there might have that you would want answered. So Edward, if you don't mind, tell us a little bit about yourself, how you got into factoring, how long you've been doing it, and whatever else you think is important.
Yeah, absolutely. Well, first and foremost, thank you, Harold and George, for having me here, man. I'm excited to deal with like-minded individuals when it comes down to this ruthless trucking industry, right?
Yep.
Just we're all here to prosper, make it through this cutthroat industry, man. And it's hard to do that when there's surrounded by bad apples. So, like you said, there's some good apples out there, and I've really focused on trying to find a lot of folks just like yourselves. And I'm happy to be here. But a little bit about who I am, where I kind of come from, and my experience in the truck industry as a whole. I started in I really just jumped right into factoring. It was a job that was posted here locally, and I'm out of Omaha, Nebraska. It was a local gig posted here. I was a young kid. And I was like, you know what? Let's see what this is about, right? So applied, went through all the interview stuff. Luckily, they blessed me with an opportunity. I started back in September of 2016. And yeah, got my foot in. Took me about 7 months to really figure out if trucking or really just the truck industry was something I wanted to be in. And yeah, 7, 8 months in, I was like, you know what? I think I like this stuff. I quickly understood that trucking is a backbone to America, right? To our everyday needs. So I definitely saw a long-term opportunity there. Factoring was still something very green to me, so I kind of just started rolling with the punches, just and did the typical stuff that a lot of folks usually don't like to do, which is dial the phone 100 times a day, talk to a bunch of no's. But really, in between all those no's and all those objections and rejections, I started building some really good relationships out there with dispatchers, insurance people, really, compliance folks, just everybody that's kind of making up the dispatch or the trucking role. And it's put me in the right position for me to, be successful in it for going on almost 9 years. Now within my 8-9 years of doing this factory gig, I've dabbled into other areas of trucking. So I'm also had my own carrier authority. We got up to about 3-4 trucks. Me and a partner that I had at the time, we got to 3-4 semi trucks. So that really put me in a position where I really was able to understand what it's like to be on the receiving end of my factory services. We're just really on the receiving end or being a carrier in this industry. So it really put me in a different position, right? I feel like I was able to be a lot more relatable with my clients, really get to understand like, hey, the value of having a good factor on your side, how pivotal it is as a carrier authority. Because I understood the cash flow crunch. I understood how important it was to make sure we had funds rolling in at all times because, tire blowouts happen. Hip goes down your neck. It seems like everybody in the truck industry is after the carrier.
Yeah.
They're always after the pockets, man. So I understand the urgency, and it really started helping me open up my eyes in reference to, is there a factor out there that is truly for the carrier? Because, I dealt with, I worked with a couple of the big factors before. I've been a part of a couple acquisitions, and I'll tell you that a lot of the bigger folks, I like to use the same theory. The bigger the company, the more hands are involved or more hands are in the pot, right? You have a a VP, and then you have a president, then you have a director, then you have a, it goes on and so forth. Manager, general manager, supervisor. There's too many hands in the pot. And I quickly realized that as a small to mid-sized operation, which is really what I've catered to with my 8-9 years, those guys typically, yeah, I mean, you're typically not in a contract that is favorable to you. There's usually a lot of lingo, a lot of stuff in there that just, we'll go down all that stuff here, shortly, I'm sure. But and going back to what I was saying, I've done trucking. I've been a part of a brokerage. I have my own trucking authority. I also did dispatch. I dispatched a lot of my trucks myself. So I'm familiar. with what it's like to be a carrier. I'm not just a guy that sits at a desk and just knows factoring and is here to sell you a contract.
This reads off an AI prompt or some kind of like SaaS prompt with the rebuttals and the canned messages, and just that's it. You don't so that's good, man. And so appreciate you giving us some information about you. But I want to discuss a lot of the complaints, at least that I get. I think Harold might have some too, but I get the biggest complaints with the factoring companies that I hear is if somebody's not happy and they want to go to another factoring company, well, now because of their contract or what have you, they can't leave, or if they leave, they're not going to get their money back that's in reserve, I guess. I don't know. There's a large sum of fees and penalties. Yeah, and then they freeze their bank account, and then they're like stuck with no money, and then it's hard for them to leave. Although with that said, I've heard that some factoring companies would be willing to pay that off for them so they can get the business, but then they'll put them in a contract as well. So that's one of the things that, can you elaborate? I mean, do you guys do that too? Are you contract based? Is it a monthly thing, a yearly thing? Or can we do business today and in 2 months I'm like, hey man, I'm not happy, I'm out of here. Am I okay to do that? Like how do you guys operate?
Yeah, no, I love how you just kind of went straightforward, man. So yeah, the typical nightmare stories in this is, I'm dealing with a contract, right? And typically factoring, I mean, I'm not even kidding. There's a factoring company out there that I saw that had a 25-month contract. Nuts. It was just crazy. I'll try to have the back from every perspective. So one thing that I'll do is when somebody's already to that point where it's like, I always listen to the client, right? I always listen to the carrier because I'm not biased. I'm not hungry for a sale. That's not who I am. So if you call me and tell me, hey, I'm having issues here, I like to find out what those issues are, right? Maybe something that a lot, I had that conversation where sometimes those issues really do stem off from the carrier. Maybe it's just a carrier that is just not a cleaned up carrier that is going to have issues. Doesn't matter what factor they go to. You get me? So I like to ask those probing questions, right? But once I do find out that, hey, in reality, the issue here is your factor, I like to do what I call like just an assessment of their contract to be like, hey, send me a copy of your contract. I'll comb through it because I know exactly what to dissect, and I'll tell you, I'll plan out a strategic exit strategy. And with that, it's always with the intention of making sure that the carrier can leave from that contract without it costing them an arm and a leg. Now, a lot of the times, I will tell you, if you're dealing with a bigger factoring company, a lot of these big guys that are huge in marketing, ones that are just here inbox daily or can get to you at day one of you. The second that you apply for authority, they're calling you. Those are the ones I'm talking about. Those guys, contract. So you're going to sign up. If you sign up with them and you're dealing with a 1-year contract, typically I've even seen some that don't even give you an early termination option anymore. They're just saying once you sign up, you're in it for 1 year or 2 years, whether you like it or not. And there's still some out there that are the old school way, which is sign this contract. It's a 12-month contract. If things don't work out, you don't like it, we also have an early termination process. And early termination is not the same as regular termination. Early termination means, like you said, 2-3 months later, if I don't like my contract, I don't like you guys are horrible, I want to leave today, that's called an early termination. But if you're like, hey, I'm going to write out my contract, and my contract states that I have to give you guys a 60-day or 90-day notice prior to my anniversary date, as long as they follow their contract to the T, once their anniversary date comes around, which is, basically if they sign up April 18th of 2024, April 18th of 2025 is the anniversary date.
Edwin, I want to elaborate on this, and I think a lot of guys don't read this contract like you're saying, and they do end up in a contract, and they don't realize that here's a 60-day to get out. If you don't apply for that within that 60 days, they're going to put you in for another year.
Yeah, it's auto renewal. Auto renewal. Yeah. So there's also some contracts out there that very funky, and I hate it because it's never, like I said, it's intended to keep you trapped. But there's contracts out there that I've seen that say you can't submit your notice more than 90 days prior to your anniversary date, but no less than 30 days prior to your anniversary. So you're given like a small 30, 45-day window where your termination notice needs to be received, acknowledged by the factor saying we've received your termination notice, it's been marked, and then you're good to go on your anniversary date, on your inception date.
So it needs to be acknowledged. That's an important thing for the drivers and the owners to understand, that they have that period with pretty much any contract that's out there.
Yeah, I forget. Most contracts, they have their windows, so you have to really get it in there. And I tell folks, it's not fun because, I mean, you know what it is. When you're a trucker, the last thing you want to do is pull over, drop up a freaking letter, put it in the mail, certify, mail it out, so that way the factoring company receives and there it's timestamped, right? That's really the only way to go about it nowadays, is you need to have some paper trail where it's like, no, I have paper trail or I have a timestamp that shows your office received it on said date. It falls within my window. I'm good for termination once my anniversary date comes out. Like it gets really shaky.
Yeah, that's crazy, man. But so do you guys have a contract?
Yeah, so like I said, I've experienced working with a couple other factors in the past. I've worked with, a pretty good factor in the past. I currently work with now, which I absolutely love everything about. And I don't say to be biased. I've studied enough factory where it's like, wow, this to me, I was like, this is almost too good to be true. And for me, selfishly, it sells itself. You get me? My role here is to essentially put in deals, right? Sign up carriers. So it makes it so much easier. But yeah, Louis, sir, we're open contract. So we do it backwards. So the moment that somebody signs up with us, we're not putting you in a 6-month, 12-month, 2-year contract. We sign you up as open contract. And at any point, if things just don't work out, or you find out, hey, I don't need factor anymore, I owe you $500,000, that's gonna be my line of credit. Cool, you get me? That's awesome.
Yeah. So does that affect the type of service they're gonna get? And when I mean service, I mean, are they gonna get 2%, 1.5%, 5%, 4%? Like, is that, if they're on an open contract, is that gonna affect the deal they get, or is everyone's the same? Like everyone gets open contract, everybody gets the same rate, or
your rate is, I'll tell you right now, our starting rate is anywhere between 2.5% at the highest 3%. Highest is 3% starting rate. 2.5% is a pretty good starting point. I don't ask a few qualifying questions here. You're going to run right. Are you going to be local, regional, over the road? What type of trick do you have? I'll ask a couple qualifying questions, but that's a way for you to make sure that I can get it approved through underwriting, right? Because I essentially I have to sell the carrier to my underwriters.
right? So that determines the type of fee they're gonna get. Is those things determining factors, and everyone's going to be different in what they get, right?
But everybody gets that open contract.
Everyone gets an open contract. That's good.
So the other, that being said, let's talk about some of the things that some of these factoring companies do, like, if they don't receive money after a certain period of time, because they don't, we had this discussion, you and I, earlier, about, it may be 2%, but if they don't collect the money within 30 days, they're not pushing that broker for that money because they want to go over the 60 days. So now you doubled your factoring fee. Is that correct? Did I understand it correctly?
Yeah. So there's, and it's funny that you mentioned that, because just on Wednesday, there's a couple of dispatches that'll go live with here and there, and they go live every Wednesday. It's called Trucking Through It is the name of the or their podcast. But they strictly speak on the dispatch side. That's a profession. It's what they do. But we were talking about a factor out there. It's a three-letter name factoring company that everyone's had the exact same experience with them.
There's a bunch,
which is, yeah, there's a bunch. I'm just not going to go to much. This specific one is well known for anybody that signs up with them. They're in a plan where, yes, hey, I'm gonna get you going at a 2%. Everybody's excited about a 2%. But when you don't understand the fact that you're in a what I call it a tiered program or a step up program, is basically what it is. I started at 2%. If I don't collect within 30 days, or the broker doesn't pay me within 30 days, every 15 days after the 30 days, your rate goes up 0.5%. or a 0.25%.
What percent
Usually it's a half percent.
for the aging invoice or for you period?
The aging, well, the longer the invoice age up 30 days, your rate, your factory rate, instead of 2% goes up to 2.5%. And then,
160 days that we're off for all future invoices, like every invoice that comes in out.
that's for that load. For whatever loads are aging past that. But here's the
You
thing.
got it.
That structure to me never makes sense. Why? Because as a factoring company, why would I want to collect as quickly as possible if I can make out my waiting 60 days, 75 days? I'm going to make out double.
Yes, that's an important part that you're sharing with us right now, that some of these factoring companies are doing that. So I had a couple of incidents where I had referred a couple of people to a factoring company, and they were actually increased. They weren't even chasing the money at all. I usually report 75 days out. So I'm sure I didn't see the whole contract myself because that's not really my forte. But now you're making me more aware of me what's going on. I'll be more cautious to who I'm referring to, as well as the people that work with me in my agency, because we want people to have factoring companies, and we want reliable factoring companies, and we don't want you to take all the money from the drivers. They work hard enough as it is. They need to be taken up. So if you're even offering, like, let's say 3% on the high end, and 3%, if you look at all the backside of things, it will cost you a lot more money than that 3% that you're actually being charged.
Oh, absolutely. Yeah, and so, and it's to dip into the category of understanding what type of contract you're in, right? So there's two specific contracts out there for factory. There's recourse and there's non-recourse. So the guys that are in recourse programs, factories, I mean, if they don't collect in 90 days, guess what? They're like, hey, Mr. Carrier, your broker didn't pay 90 days. We're going to charge you back on that $2,000 load that we paid you on 90 days ago. Okay. And at that point, they were already charged the factory fee out of it. And now they're coming to the carrier charging the full load back. That's what a recourse program is. They have the right to come back and charge you back on any loads that they paid you back that they were unable to collect on or get paid on. Non-recourse. Non-recourse is the opposite, right? Non-recourse is essentially if the broker is bankrupt, liquidates, whatever happens, if the broker just doesn't pay and is unable to pay on those invoices within 90 days, then the factor takes of the risk at that point. So then we back to the carrier.
Does everybody qualify for non-recourse, or is that
That's all that we offer. That's all we offer is non-recourse. Yeah. Now there's some situations that you say, hey, we're not talking about a broker at this point. Let's say it's a bigger fleet and this fleet is dealing with a direct shipper, right? Like a Kroger directly. In that case, if it's like a shipper that we just don't have enough credit data on, like just because there's not the systems that we use, a lot of these shippers don't have enough reporting on it. So it's hard for us to mitigate or to measure risk when there's not enough data, right? With brokerages, it's easy. Everybody reports on brokerages. We have enough ways to, pull up data on a brokerage to be like, hey, do they pay? Do they not pay? But with shippers, yeah, it has happened where, the carrier's in a non-recourse, but if they really, really want a shipper approved, we're like, hey, I really need this client approved, Edward. If it's something we're like, you know what, we're going to take a little bit of a risk on it, we will say, hey, for this specific client, we're going to have to treat it as a recourse, right? So if they don't charge, if this client specifically fails to pay us, then just understand that for this specific client, we're running a recourse program on them. What I'm saying is we customize everything here for that. We're not just putting you in a recourse with everybody. As everything's non-recourse, we're dealing with brokers. It's a non-recourse. That's a majority of our clients. That's what they're doing is running with brokers.
And I'm assuming your bigger shippers are going to pay. It's a normal business practice to pay 30 to 45 days out, anyways. That's a normal thing.
So Ford Motor Company, everybody knows Ford Motor. They pay at 75 days.
And why crazy, man? That's crazy. You're pretty much like a bank for them is what's happening. 75, 8 minutes. That's a lot of money. That's a lot of money.
You're not nobody to tell Ford, hey, change your terms for me. Maybe if you're coming with 10, 15 trucks, but it's either it could wait 75 days or, continue to serve.
No, one of the most important, and I'm sure for a lot of you guys out there when it comes to factoring, is how fast are they going to get their money? So I factor and I send you the bills. Do I need to do anything, or I just send you the bill lady and you guys do the rest?
So the only thing that we require here is we don't have like a automated the admin fee. I've seen that a lot, like with other factors, they call like an administration fee, which is really they're just creating an invoice for you and they're charging you for it. We don't do any of that. Over here, if I tell you your rate's 2.75, that 2.75 covers us doing your invoicing, we do the billing, and we do the collections for you, and we do credit checks for you. So all you have to do as a carrier is send in the rate sheet that you have from the broker showing how much a load pays, and then the bill of lading or all BOLs that come along with that load. And then from there, you can upload it in the portal that we have. You can email it to our inbox that is all invoices everybody's working in that inbox, and we pay you within 24 hours. 24 to 40 hours, but we're really good at paying within 24 hours, as long as your paperwork is in by 3 p.m. Eastern time.
Right, I'm sure. Okay, that's what I thought. Well, you could have it. Yeah, that would be the up and down.
For sure. We're playing against the bank's time at some point. I mean, if the bank says, hey, this cut off for wires, ACHs, and we got to get invite out.
So basically what you're saying again, other companies are charging this administrative fee and you're still just charging the one fee.
Exactly. Oh, man, it's very clear. Yeah, because there's a bunch of fees in this industry. I've seen administration fees. I've seen when they go rush, funding fee, convenience fee, fee, which essentially rush funding. I figured it out. Rush funding is just them saying, "Hey, get it in by this cutoff time, and we'll pay you same day." Or do extra for that? No, over here it's not quite. I told you, get it in before 3 condition time. That gives time for your account rec to get process a load, invoice it, verify it, and get you paid. That's it.
Sounds
Right
like
out of the project.
sounds like a no nonsense factoring approach, man. I mean, hey man, you open contract, non-recourse. Just send your bill of lading before 3. We'll take care of the rest. You get paid. Here's your percent. I mean, that's pretty, for me, that's just straight up what we're doing. And I like that. I mean, when I wish you guys were around when I was running trucking companies and stuff, right? Because we needed that. And there was barely anyone with that. Things have changed, obviously, but that's good to today's soldier.
The other thing is we talked about exiting too. Is there a fee for exiting, or is there a minor fee for exiting, or is there no fee for exiting?
No, over here it's an open contract. So let's say you say, hey, things are not working out. I hate it here. I gotta go. The only thing that we ask is you give us a 45-day notice. So at any point, it can be at day 1, day 10, day 30, 90, 100. It doesn't matter. At any point, you say, hey, this is my 45-day notice. At that point, what we do is within those 45 days, what we use as clear for balance, right? We try to collect from the brokers anything that we've already factored for you as quickly as possible. We don't make you stop factoring. If you need to keep factoring, go ahead. But in 45 days, when that comes around, your account manager is going to talk to you and say, hey, your 45 days came around. Are you still wanting to exit? And if that's the plan, then just make sure that, you as a carrier, you have the new factoring company available to reach out and start what we call the buyout process. But we don't have any buyout fees, nothing like that. It's just whatever balance is still open, they would buy us out on that. That's it.
That's a good deal, but
Yeah, no, it sounds right, right?
I've seen a lot of nightmares for these guys. They can't get out. They can't move on.
There's one right now that I'm trying to help out, and there's actually a few, but the two that I've tried to help out, that I'm like, I can't help you. I didn't encourage you to even try to come up with the money. There was one that was costing him $43,000. The other one was costing him $32,000 to terminate. And I'm talking about not your agent report balance being included in that. That's just fees for you to terminate. They have fees where it's like,
Is that early or is that just
that's any trigger. It's early termination. So it's a combination of the early termination fee, and then they also do where it's, let's say you're in a 2-year contract. Let's say you're 1 year. Just kind of keep it simple. Let's say you find out 3-4 months into your factory service, it's 3-4 months, and you find out it's not a good fit. You still got all 6-8 months left of your contract. What they do is okay, well, you still have 6-8 months left of your contract, where it's going to be an early termination fee plus every month remaining of your contract, and that fee is calculated internally. It's not even a fee that you can say, okay, well, it's a flat fee of $100 per month remaining. No, it's a fee that they basically calculate internally, and that's how it gets to a drastic number where you're just like, well, no, I'm not going to leave for $30,000. So that's crazy.
So you're saying it, even in this contract, it doesn't disclose what you're just saying right now. Is what you're saying?
It's some language that basically states it's at the discretion of your factory company to calculate roughly basically fees that they quote unquote believe that they lost, that they would lose on your leaving early in those remaining ones. So it's figurative numbers. It's the best way to put it.
I have another one that everybody asks us too. When they, what about the companies, that, carry a big debt? And I've had some guys say, "Hey man, look, I got this big client of mine. They stopped factoring them because they reached 50 grand, 50,000 in debt, and until they make a payment, they're not going to factor them in bills. But that's my main customer. I got 10 invoices that they don't want to factor now because they said that my client needs to make a payment. So does that happen with you guys, or are there clients that, hey man, look, after 100,000, we got to put a stop and
So to me, it sounds like it's more so lack of, which is what I do, right? If you come to me and say, hey, Edward, I have a customer, I'm paying roughly about 50 grand a month with them, I need to make sure that when I get that customer approved for you credit-wise internally, and I have enough credit available and that we feel comfortable being able to hold off $150,000 of invoices with them, right? So that way you're not hitting that limit. Obviously, we need to understand that not every customer is going to have an infinite amount of credit. Like there's credit limits for good value, right? But it sounds like a discovery fail. It sounds like somebody just rushed and passed. You get signed up, and it's a poor tactic. They get too hungry for the sale, and it's like, dude, your duty to service your here at that point. So I'm not saying that we wouldn't do it, but I'm telling you, I'm going to ask the proper questions to make sure that if you truly are factoring that, I need to make sure I have enough credit available for you. Now, I would say if the customer, maybe let's say, hey, we paid a net 45, and we have a balance of 3,000 sitting during that time, net 70, 80. Well, what's going on, right? Let's figure out what's going on with the customer. Why are they not paying? Because that is eating into your available credit with them, right? But to keep it straight up with you, I mean, it's a possibility that it could be an issue with us, right? But a lot of that has to do with making sure that we understand your client. We need to make sure that we understand the carry to the T. This is your portfolio. This is who maybe you're 80% concentrated with. Let's make sure that we have enough credit extended and available for this customer.
That's disclosed, because I think maybe when that happens, a lot of guys are not even aware that there's a limit until the limit's reached, and then it's like, oh, well, hey, by the way, they reached your limit, we can't factor. You're like, what do you mean? I got 10 loads coming in, and now I can't get paid. And now I can't pay my guys, or I can't pay my expenses, because a lot of companies, I don't want to say are check by check, but the reality is a lot of them are relying on they're relying on that money to take care of payroll and everything else. So, and there's times of the month, which we all know, that it's just like that, man. You just have enough to cover expenses, so it's important to have that money.
Basically, what I tell everybody, you're in trucking. It doesn't matter if you're in the truck, if you're dispatch, if you're compliance, it doesn't matter. Insurance, trucking requires communication. Factory, communication is everything in trucking. So if you're in operation, let's say you start off with me as 2-3 trucks, right? Healing and adding more and more trucks. You should probably let your account rec know, hey, we're going to start factoring a little bit more. I'm adding 3, 4, 5 more trucks. Things like that are helpful for us to know, so we can make sure that it's looking good over here with your clients. We have enough credit for you to scale in. So you get me?
Yeah.
Right. And, you start off at 2-3 trucks. You have no communication with us about your scaling. And then all of a sudden you're like, oh, why am I not able to factor 50,000 a week with this customer anymore, Edward? Well, what's going on? Then you only have 2 trucks. Oh no, I'm at 8 trucks now. Well, let's look into this now, right? Like it's a whole different diagram now. So things like that, it's good to know, like even just a quick cue to your account manager. Hey, we added 3 more trucks to the fleet. Revenue's going to go up. Cool. Big, your account manager knows what to do on the back end.
So do you tell your customers, or you break it down like this? I'll give you an example. For me, if I don't tell people we were just talking about cargo today on a prior podcast we did. And, a lot of people, they don't tell them what's covered in their cargo insurance. And then when it's time to make a claim, they can't make a claim because they didn't follow the protocols with requirements or understood the underwriting guidelines at all. And that's the responsibility of me to do that. And unfortunately, there's a lot of agents that don't do that, right? I try to do that, and I try to make it very clear. And sometimes myself, I have to even put it on our contract just to make sure they don't come back and say 6 months from now, you never told me that. Well, it's on the contract, then we'll sign.
You got, yeah. I think what you said there, man, this is great. It's communication is key. I think anyone out there that is looking for factoring or a new factoring, you definitely need to hook up with Edward here. You got non-recourse, you got open contract. They disclose to you what the limit is for certain clients. This is a win-win. I see dealing with you, Edward. So I think it's great. But a lot of them, older guys should ask questions anytime. These are the questions you need to ask these factoring companies. And if they don't offer none of that, man, listen, at the end of the day, business is business. You need money in your pocket. And I think guys like Edward, companies like Edwards are the ones that can help you do that with nonsense. So
there's some really good questions that you need to be asking your factor. Like I always tell folks, ask the question, what is my advance rate? Advance rate is a term that every factory company uses in their contract. Advance rate means it's very simple now. If I'm quoting you, it's 2.5%. Just kind of keep numbers simple. If I'm telling you, hey, 2.5% your rate with me, that means that your advance rate with me is 97.5%, right? 97.5 plus 2.5 equals 100%, right? 100%. Some factoring companies, they'll be like, oh, your rate's 2% with me, right? But then you look at the contract and their advance rate's 95% or it's 90%. Your question should be, why are you telling me 2%, but you're only advanced me, 90% of the invoice? Where's the other 8% sitting at, right? And so that's when you have like a reserve or some type of escrow account on the side. In reality, they're holding 8 to 10% of your load. That's what they're really doing.
Does your company have a reserve rate or?
No. There's been one client that I've actually had a small reserve on, and the reserve was a 2% only, and that's only because he was 100% concentrated doing hazmat. So at that point, it's really risky. Give me from a financial perspective, you're running hazmat and you're 100% concentrated with one client. So he was very distinct. He was like, yeah, completely understandable. Yeah. That's the only time. Outside of that, you come in, you're a very typical client, which is either a box truck, drive-in, hauling general freight, things of that nature, produce, stuff like that. You're going to deal with a flat rate with me. I'm not doing none of that reserve escrow crap. It's very simple.
And the client can come to you and see if certain brokers are qualified because that's what you're going to do anyway.
Yeah, your credit checks. Yeah,
you're going to check all that for them as well too. Whether
absolutely.
Because I'm sure if you're got a simple way to get out and a simple way to get in, you're going to have to protect yourself.
Yeah,
and you want to make sure that person is going to pay those
for sure
load bills.
Yeah, because we're non-recourse. You got to realize, being non-recourse, we're 100% taking on more risk, right? When we purchase that load for you and get you paid, we want to feel very, very certain that we're going to get paid on that, right? So, and I thought, a question that comes along with that is, well, since you guys are non-recourse, are you guys stricter on credit approval, on brokers? You guys approve less? I don't think so. I have a dispatcher that dispatches a couple carriers of mine, but she also dispatches with a couple other carriers that factor somewhere else. And she's ran a couple credit checks through me, and she was like, I don't get it, Edward. She goes, this client, their factory company is not approving it, but you guys are. I'm like, well, I'm going to tell you, they're approved with us. And that makes me feel good, because that means that, we should be a lot more non-recourse. But I've had that conversation many times already where it's like, we're approving more customers and clients than a lot of these other big factoring companies are.
So,
and a lot of those big factors are recourse programs. So I understand.
So I know where you came from, Plath, because we had that discussion before too, as well. Do you rate or do you put out a list for the drivers to know which companies are rated at certain levels, like an A carrier, B carrier, C carrier, D carrier, which you probably don't want to deal with? Remember?
So we used to have like a do not buy list, like do not, basically these brokers are horrible credit. Don't ever, we can't factor them. I don't want to say don't ever use that, because as a carrier, you have all the rights to go and so when I look for them, we just just a back for your
But I would say I would take your advice, and if I see him on a list like that, I'd rather not even do business like that. So
Right. And so we have a mobile app. It's on the app search of GH Factor. Oh, there you go. I just threw the beats. Anyways,
So we have mobile. So
you know, you can go on there, look up the name of the app. Once you get set up with us, we give you your credentials, right? Username, password, you log in, and then from there you can. The moment they look at a broker, like, huh, this load looks like it's a good load. Let me inquire on it before I book it.
Yeah.
You just grab the NC number, type it in there, and then we'll tell you, you know, approved, denied, or call credit, right? Call credit could mean that we've just haven't worked with them in a while. So just call me or your account manager real quick or email us MC number, and we'll do a fresh credit check for you internally.
awesome, Edward. I thank you for your time, man. I think we're gonna wrap it up. I appreciate everything, the information. We're gonna go ahead and leave. We're gonna do something better for everybody out there. We're gonna leave a link in the in the description of the YouTube video, and that link is going to take you. If you're interested in Edward services, it'll ask you some quick information, and it'll get over to Edward, and that way he can help and hopefully get you guys factoring with him. If you have any comments, any experiences you'd like to share, or any questions that you think we need to ask Edward, please leave it in the comment section. Also, don't forget to like and subscribe to our channel. And, you know, I'm George with HCM Integrity Service. We do the compliance. Anything you need, any questions you have, just let us know. I got my partner here,
Hal, with Untouchable Insurance. And like I said, we're very happy to bring people like Edward in here to share. And we all, both of us, all three of us here together, we all want to see the trucking industry grow.
That's right. We want to see you grow. We want to see the small guys grow. And remember, 93%, I think, is all small carriers or operators.
And
Yeah, it's just like 93%. That's who's in the market. That's the majority of people in the trucking industry are small guys, small carriers. And that's who we need to help, because I think the other 7% are the big mega carriers, big guys who kind of have their own funding, have, you know, self-insured. They're, you know, so we need to help the other 93%. Because without you guys, none of us would be here. So we are trying to help. We are trying to help you succeed and set you up for success. So thanks for tuning in. We appreciate you. And until next time.
Well, that's a big fan for.